Good morning, Mr. Marren. To everyone on the camera, my name's James Franklin. I'm one of the managing directors at Danos Group. I'm introducing Jonathan Marren, CEO of Invinity PLC. Welcome this morning.
Thank you. Good morning, James.
Today's video is around our theme of pathways to success, and your career path, moving from CFO to CEO, is obviously highly fascinating and highly relevant journey for a company at the forefront of the long duration energy storage revolution. I wanted to kick off and talk about your personal pathway and your transition into CEO, having had a background in finance and corporate development. What sort of unique perspective do you bring to the CEO role, particularly one founded on an understanding of corporate finance and structure?
Good question. It's probably worth just charting back a few years into my career. In fact, I went to university, I did maths. I did maths at university. And actually what that means is I've got a calling card that says numbers is something I'm familiar with. Yeah. Albeit most of the topics through my maths degree, are sort of in the dim and distant past. But actually I went on to join Arthur Andersen as an accountant. So I studied for 3 years, chartered accountancy, which I think was probably the first bit of learning. Firstly, to understand just how business works, but also Arthur Andersen was very good at getting you out on the front to meet clients as well. So it was kind of sort of, the idea was they weren't necessarily hiring accountants, they were hiring people who could understand and deal with clients and win business. But I then left and went into the city, and that's, I think, probably where the skill set I still use now was developed. So I spent 12 years in the corporate broking world with two businesses, both Peel Hunt and Singers. And both those two were fundamentally my role was in the corporate finance, taking private companies public.
Right.
And what that meant was, ultimately, I was working with management teams, preparing their business for public life, but also trying to assess whether they were viable businesses going forward. And so I was part of that initial sifting process of looking businesses across the field within that. And that gave me a good perspective as to understanding, what would make a successful business and those that was maybe more challenged. But quickly I worked out that actually, as an advisor, I hadn't actually done it myself. And I felt as if that, I was advising management teams that were more credible than me. So I then started life as a CFO and went across that CFO side. So what I haven't done is built myself up through a finance function, albeit corporate finance and accounting auditing has been my background.
Yep.
And I think when you look at CFOs, you get many different types who sort of fulfill different types of roles within that. I am far more a commercial strategic CFO than a sort of, accounting standards, running a finance team necessarily perspective.
Yeah.
And I think that has been quite a useful lead into the CEO role, because I think those skill sets really do transfer and are necessary in that CEO space.
Okay. And if we look at sort of defining your success and balancing the risk, and talking about the energy transition and how the market's moving, how do you balance the sort of entrepreneurial nature of the business and the drive needed for the development of the tech that you focus on, but also running a disciplined financial business, I guess, with operational rigor in a public business? So how do you balance that?
Again, interesting question. The bit you added on the end provides the real complexity.
Yeah.
But it's in a public environment. So if in a private business, you can have conversations with your shareholders along the way, and no business tends to run in a straight line, and you can move within that and have a conversation. Public business, you've got a reporting cycle twice a year, and you've set expectations, you either deliver or not. So that becomes much more challenging. For us, we are in a highly competitive space, but we have a very good competitive position. Our competitors are Tesla, CATL, BYD. They are the Goliaths of the energy storage space. They are clearly well capitalized. We are smaller in nature, but a different technology. So you have to focus on the core products to make sure you're investing there. It's investing in the technology, it's investing in the customer service. The thing I'm most proud of is actually our reputation with customers. That is what ultimately will lead you forward, and that comes from having a good product as well. So you have to have that, But the financial discipline that sits within there means that you have to be quite frugal with things you would otherwise like to invest in. So it's trying to get that balance, but never losing sight of the fact that if you need to raise more capital, you have to have a product and a story to tell those investors.
Interesting. And I guess we're obviously a recruitment business, and I have to ask the question as CEO, what is your strategy for attracting top tier talent into a growing business in this sector? How do you go about doing that?
In terms of getting people interested in the sector, that isn't a challenging point. And I think anyone I speak to, both any of my friends, any business acquaintances, colleagues, they're fascinated by what we're doing. We are front and center of everything that we talk about now about the energy transition. The more challenging nature is the fact is, where are we going given that competition? So it's really giving them the excitement as to how we are able to make a real difference going forward. And there's not that many people that are lucky enough to be able to say that about their careers and what they're doing. We can make a real difference, but there is a balance there because we are early stage, and there is equity incentivization that comes with that. We aim to pay a fair wage. We're not overpaying, and we're certainly not sort of penny pinching either. So set a middle of the tier there with equity compensation that sits on top of that. But above that, most people who work for us, and we are blessed with some really loyal, dedicated employees, I think are not doing it on the financial side. They are doing it because actually they see a real difference in what we're trying to achieve.
Are there any technical areas that you feel that the market is short of at the moment that you struggle in your area?
In what sense? From a recruitment, from a talent perspective?
Yeah, from a talent perspective. So if you're looking at engineers, or if you're looking at technical type roles rather than general corporate or finance backgrounds, are there any special areas that it's more challenging?
Not particularly. We recruit both in the UK and in Vancouver. We're broadly split across both sectors. We tend to have a little bit more of the product development side in Vancouver. In the UK, and we are doing maybe some slightly more of the operations side, and also from a sort of an R&D perspective on the chemical side of the business. We recruit from universities throughout the Central Belt and Scotland, Strathclyde, Glasgow, etc. And actually there is a ready availability of talent there. We hope to recruit up to 1,000 jobs in that Central Belt in the next few years. If we're successful in the UK under what we call the cap and floor program for our technology, that will be more of a challenge without doubt. But one of the things that we are saying to the government, to Ofgem, is that we are able to retrain people from the oil and gas industry. So what we are looking for is somebody who has an area of expertise in engineering, but we can retrain them to move into the chemical side, into the electrical side, into the mechanical side.
Very interesting. Okay. So just coming on to sort of corporate governance and probably financial accountability, which obviously you've got a lot of experience in as an ex-CFO, and obviously having served as a non-executive director for another organisation, how has this sort of perspective informed your approach to leading the exec team, and how do you ensure clear lines of accountability and a sort of a robust oversight within the organisation?
I see the accounting function as forming two roles, really. One of which is at a point in time reporting to the outside world. It's a bit like your exam results. How have you done over the last year? And it's a statement in time, and you always get a mark for that. Yes, that's your earnings, that's your turnover and your growth, and that's important. But actually, what really drives change and an ability to manage the business is the information you're giving on a monthly basis or more regularly than that. So therefore, what you're really trying to make sure is that the management information that you're delivering to the executive team to inform decision-making is accurate, on time and useful. And fundamentally, if you are focusing your business on that areas, then the statutory reporting element falls out of it. What I have seen before with some CFOs, some people in the industry, they think that the be-all and end-all is the statutory reporting, because fundamentally that's what the outside world sees. But that is a point in time. You're often reporting 6 months after the event. Things have moved on since then. You need that information to drive it much sooner than that.
Okay. And just thinking about that corporate governance and risk management within LDES, obviously it's a very high growth emerging market. What is your process for, I guess, identifying and mitigating the non-technical risks such as supply chain concentration, Obviously, you've got geopolitical uncertainty. There's regulatory changes coming in. So how do you mitigate against some of that, and how do you communicate those risks potentially to your investment community?
So, I mean, from a sort of communication perspective, we have a risk register both internally, and then a risk register that sits as part of our financial reporting package. So ultimately, that is the delivery of those risks to others. I'm always myself marginally skeptical on some of those aspects, because you end up trying to draft words that go into a document. And that, again, is almost the end result. That's the reporting of your exam result. It's what sits beneath that. It's the actions you are taking to mitigate the risk. I think it's a really good focus point, because if you have that, then you have to have the actions that sit beneath here. So I like seeing that, but actually it is the real actions that sit beneath that. From our perspective, supply chain, we are relatively highly exposed to China at the moment, from the delivery of some of our balance of systems. So we're talking steel, we're talking pipes, we're talking wiring. We're looking to set up sort of another supply chain within India, so that we have a source of supply outside of the two that deals with the geopolitical risk. It also keeps suppliers honest, it keeps with movements and tariffs, etc. So that's quite important. But ultimately, we touch heavy engineering, we touch technology, we touch AI, we touch chemical engineering. It is quite an effort to keep control of that. And then obviously you'll wake up one morning and find out the tariff regime has changed. One of the reasons we're looking to have manufacturing in the US, UK, Vancouver, India, China, and potentially elsewhere is to be able to deal with that, to retain that flexibility.
Has there been a regulatory change in your market recently that has impacted any of that?
I think the most obvious change is what's happened with the change in administration in the US. So certainly up until the change in politics, was it almost 18 months ago, the business model had been to export into the US from the UK, and particularly from Vancouver. Obviously, the sort of Vancouver-US trade relations at the moment are challenged. But actually, that's created opportunities for us, because a lot of our competition, as I say, is effectively lithium, which comes from a Chinese supply chain. It's difficult. It's much more expensive to see that delivered in China and in the US now. So it gives us the opportunity to set up a US manufacturing base and actually exploit that as an opportunity. So I think what I'd like to do is sort of see those challenges come through and say, actually, how is that affecting our competition, and how can we benefit from that? Even if there's a lot of change that comes with it.
And just thinking about sort of outlook and where the market's going. You mentioned the UK cap and floor scheme, and I think you're talking about the US IRA regulations there. What specific market or policy developments do you think could be the tipping point for long duration energy storage? So actually, this really does become a global setup.
So if you'll allow me to expand that question a little bit as well, 60% of growth in electrical demand between now and 2030 is forecast to come from India and China. It's significant. So whenever we think about sort of the challenges we face in the UK, even the US, it's dwarfed by what's going on in India, China. So our business is one about reducing costs primarily from scale. And therefore, those two markets are ones we're looking to exploit so that we can grow our distribution of product and bring the cost down. So in those two markets, those are growing because of the demand for electrification. Now, our batteries will pair next to any generation source. You can put them next to nuclear power. Nuclear power delivers power at a fixed generation, and obviously demand is fluctuating. You need batteries for nuclear. But often you talk about batteries going next to intermittent renewable energy sources such as wind and solar. It's obvious the solar doesn't generate overnight. You need to time shift that overnight. But wind has a capacity factor of, say, 30 to 40%, which means the majority of the time it's not generating power. You need to be able to time shift that as well. And therefore, having a battery technology that can be flexible to deliver those different vagaries is useful. So, it's obvious from a system benefit, batteries are needed. The question is what drives that commercially, because everyone wants to deliver projects for a return. And that's where regulation is bridging that gap. between the system need and the ability for them to generate money in the short term. So the UK has been fabulous in terms of driving policy forwards and is probably at the forefront of battery storage. It's done brilliantly in offshore wind. That's created the challenge of needing to move that power around. So the cap and floor program you talked about is setting up some financial certainty for projects to get delivered. So effectively, they're underwriting the investment return at a base level to enable you to put leverage into these projects. And then the quid pro quo is that if those projects make above a certain return level, they hand some of that back. And that has generated an enormous interest from developers.
Okay.
And we are lucky that of the 77 projects that are now moving through that process, there were 171 to start with, now 77. We have 21 of those projects with our technologies in that. So that is very exciting. There will still be attrition throughout that.
Yep.
But as I say, were we to win all of those projects, and we will not win all of those projects, but were we to, that would be 1,000 jobs in the UK. Yeah, okay. That would be billions of dollars of revenue for us.
Yeah.
US-wise, slightly differently, they've got almost sort of microgrids around their different the states. So it's a very, very different type of grid than us. California is at the forefront of driving the route to zero, not just net zero, but zero.
Yeah.
And California is the fourth largest, if it was a country, the fourth largest country in the world. They are very pro renewables and storage.
Yep.
And that's Princemere. We've got about 5 projects already delivered there. And we've got a very good relationship with the California Energy Commission that is supporting us and a number of other different technologies to get to that fully deployed, very large commercial scale.
And are you seeing growth across Europe as well? I know, for example, that Portugal is virtually self-sufficient on renewable energy. You've only got to drive around the country and see all of the wind farms and the solar. Are you seeing a growth across Europe, or is it being hampered by regulations for coming out of Brussels?
No, we've not seen any regulation coming out of Brussels hampering that.
Okay.
If you think people's memories of the Spanish grid obviously went down last year. And without getting too technical, the grid used to rely on the fact that you had a coal-fired power station or a gas-fired power station. It was what's called spinning inertia.
Yeah.
You effectively had a turbine that was spinning, and then when things went wrong, that would continue to spin and allow you to get things back on track. You don't have that anymore because you've taken coal off and less gas. And what the perception is Spain didn't have enough on was sort of what's called synthetic inertia. And that comes from batteries.
Yep.
So batteries are able to replicate what enabled to happen there to enable you to match supply and demand exactly and keep the frequency at the level.
Yep.
So actually, yes, you're right. Self-sufficient from a sort of generation perspective, not self-sufficient from a storage perspective to be able to time shift that and provide that resiliency. So you are seeing much more of a move to deploying storage. And typically that has been lithium batteries at the 1, 2 to 4 hour range, but now moving to that longer duration. So for us, there's about 6 long duration storage projects, almost demonstration projects, but a reasonable size being deployed in Hungary.
Yep.
And we've got a significant number of those and looking to grow into a few of the others as well. So, we are a small business. We're 190 people. There's only so many markets we can be in, but we tend to cherry pick where we can do and try and dive and exploit opportunities as they come up.
So just coming back to you and your success and looking forward, and if we were to speak again in say 5 years, what specific achievement would you personally like to be accountable for and say, this is what I did at Invinity that made a difference?
We've all heard of lead acid batteries. We've all heard of lithium batteries. We've heard of pumped hydro, which is things we understand.
Yeah.
It'll be fantastic if you just think of a vanadium battery. In that means it's another battery with a technology that's well understood and works and is deployed on the grid. We're beginning to head there, but we'll get that if those products are deployed at scale. And the reason I start there is if they're deployed at scale, then we will have made a real difference from the ability of time shifting power when it's needed.
Yep.
And that is what will enable us to get greater deployment of renewables onto the grid, which has a huge climate change benefit and a huge benefit energy security and prices. In the UK, we pay some of the highest power prices of anywhere in the G7, anywhere in the Western world. And it's because of the way our grid is structured, because gas sets the price the whole time.
Yep.
We can take that gas off the grid because you can use low cost generation from renewables, we will drop the power price for both of us when we pay our bills, but also from a manufacturing perspective. And actually it's what is needed to stimulate that growth. So again, you sort of filter that down. Ultimately, we could potentially be partly responsible for those lower power prices and growth in manufacturing. That would be fantastic.
Excellent stuff. A fascinating conversation. Really interesting to hear where the business is going and the changes of front. So thank you, Jonathan Marren, for coming in.
Pleasure, James.
Hopefully our viewers will find that interesting. And hopefully we'll see you again on the next Pathway to Success video. Thank you.
Thank you.